What's your take, and particularly on the price? Was it rich or well priced?
Yeah, I think James Gorman talked about it being a full and fair price, and I think it's a good price for E-Trade shareholders. So I'd be happy if I'm an E-Trade shareholder. If you're an E-Trade shareholder, you're going to now own Morgan Stanley going forward. So I think that has to be kind of contemplated here. But I think the market spoke today. Morgan Stanley stock was down a little bit because it is a full price, and kind of the immediate accretion numbers are pretty modest. But I think this is a much bigger kind of strategic play for Morgan Stanley. I think it will be an important asset for them. And the digital story here in the space, and there's so much happening today, and I think with Schwab acquiring Ameritrade, a lot of the called startups coming up and going after this customer base, with brokerages going after banking customers and really trying to go after a broader wallet share. I think this will put Morgan Stanley in a better position to compete. And so it's not about what's happening over the next year or two here. I think it's the bigger kind of strategic picture, and I think it does make sense.
What happens to the independent brokers that are left, whether they're startups or the interactive brokers?
Yeah, I think it depends. I mean, really, the game has been acquiring customers and then try to figure out how you can monetize those customers. So there's some firms that I think have scaled enough where they're in an okay spot. But really the theme here is you need to add capabilities so that you are able to service the customer not just on one product capability, because so many products are becoming commoditized. So trading, investment management, custody. It's where is there opportunity to provide advice or do something that's value added where you can really help the customer. And so I think where we're seeing firms evolve here is towards optimizing the customer's assets and liabilities. So how do they find products that are going to provide better yield on cash, provide lower fees on investments, give away trading, give away certain parts of investment management. And you have to really have ability to check all those lists on both the asset side and liability side. I think technology is enabling firms to do this, so that's a big theme.
Will Goldman Sachs be annoyed, not so much that they didn't do the deal, but that Morgan Stanley did?
I don't think so, and I think that Goldman Sachs possibly looked at this, and this just wasn't the direction. For Morgan Stanley, it makes a lot of sense strategically. I know you guys have been talking about the corporate stock plan business. That's 25% of E-Trade's accounts, and so it really is a natural fit for these two firms. Morgan Stanley just started talking about how they really want to convert corporate stock plan customers over to wealth management customers. So that's unique to this deal. Goldman Sachs, I really like where they're going kind of with their digital strategy, and they're doing a lot of things I just talked about in terms of finding differentiated ways to check the boxes on the asset side and liability side of a customer's balance sheet. And I think they're going to have a disruptive consumer platform as well.
What's your rating on Morgan Stanley and Goldman Sachs?
So we have a neutral on Morgan Stanley. We have been bullish. Like I said, I like this deal. I think the market's going to like it more time they spend on it. Goldman, we just upgraded, very bullish on where the firm is transforming. I think it's probably the biggest transformation of financial services right now, and I think they're holding a lot back. I think there's more to come on the consumer initiative and some of the other growth initiatives.